Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing some technical analysis on Bitcoin and the cryptocurrency markets because, guys, Bitcoin has had a very good last couple of weeks. As we can see here on the chart, we've seen basically nothing but green candlesticks on Bitcoin anyway for the last couple of weeks. We saw 1, 2, and maybe 3 little red candles, but basically Bitcoin's been doing nothing but going up, and in doing so, it's smashed about a dozen important levels of resistance, some of them more important than others, but it's smashed a lot of really powerful support, or resistance, excuse me, and based on this, and based on the looming news of a potential Bitcoin ETF approval in September by the SEC, I am expecting that a Bitcoin bull run is going to be starting in 2018. I think it is going to start. I think this is the time, but for that bull run to start, Bitcoin is going to have to break 3 important levels of resistance, and I'm going to show you what they are in today's video, and I'm also going to explain why they're important. But before we get into the video, guys, if you enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell. We make cryptocurrency videos every single day, and I wouldn't want you to miss any of them. So let's get right into it. Bitcoin is currently trading at around $8,250, depending on what exchange you're looking at. It's about $8,225 here on the Bitfinex chart. It's been doing pretty well over the last couple of weeks, like I said, and we're going to get to the chart. I'm going to show you some levels of resistance here in a second, but let's go ahead and do our cryptocurrency market recap. Bitcoin's up about 0.5% in the last 24 hours, and the rest of the cryptocurrency market is likewise pretty green. We see a lot of good gainers up here. We don't see any double-digit gainers, but this is still a nice thing to see. We see quite a bit of green. We don't see that much red, maybe 2 dozen red coins, maybe 25, 26, 27 red coins, but overall, the cryptocurrency market is rather neutral with a slight green tinge. And this is something that's interesting because pretty much, not pretty much, literally every single altcoin here in the top 10, from Ethereum to IOTA, not including Tether or Bitcoin, of course, is green. And that's something nice to see because that means that a lot of the valuation that was going into Bitcoin for this little run that we've had is starting to flow back into the altcoins. And that also shows through in the Bitcoin dominance. If we come over here to the Bitcoin dominance chart, it actually did peak at around 47%. If we come in here to, let's do 3 months, it peaked up here at around 87, or I keep saying 87%. It peaked up here around 47%, right here around 47.35%, and now it's cooled off. It's lost about like 0.75% of the market dominance. That alone doesn't really mean a whole lot, but I think that's a bit of foreshadowing. Like I said, I talked about in yesterday's video, which you can watch in the top right, that I believe a lot of the valuation that has gone into Bitcoin over the last 2 weeks or so, some of it is going to be moving off and going into the altcoins, which I think is going to be healthy for the market in general, because you don't want Bitcoin just going up and the altcoins going down, because that's just not really a healthy trend to have. That's not what a developing market looks like. You don't really want to see all of the valuation going into Bitcoin, and I don't think that's what's going to happen, luckily. The volume for Bitcoin is doing quite well. Bitcoin has about $5 billion, almost exactly in the last 24 hours of trading volume. Ethereum is hovering around 1.6 billion, and for example, EOS is doing pretty well. It has around 600 million. Same with Bitcoin Cash. Volume's looking quite nice right now. I'm pretty happy with what volume looks like for the time being, anyway. One interesting thing about market capitalization is that total cryptocurrency market capitalization is back over $300 billion. Now, this is one of those levels where I've talked about in the past where I don't believe this level to be as important as Bitcoin's market capitalization, simply because you can't really trade the entire cryptocurrency market in like an index fund or something. But with Bitcoin, you can. You could actually trade Bitcoin, of course, because we do it all the time. So I'm more interested in this market cap level of support or resistance. But this one is interesting as well because $300 billion is a level that a lot of people have been talking about. A lot of people are probably trading based on confirmation of getting above this level. So it's nice to see Bitcoin getting above this level. We did recently get above it back over here a couple days ago when we were getting up here around $8,400 on Bitcoin. But now that some of the value has gone into the altcoins, that has continued to rise, even though Bitcoin's a bit lower. Long story short, seeing this above $300 billion is a bullish sign, and I think a lot of people are taking it that way. Now, on to the 3 levels of resistance that I wanted to talk about in today's video. There really are 3. There's a few more. I'm not going to include 10,000 in this because 10,000 is very obvious, and I think if we break these 3 levels of resistance, breaking $10,000 is inevitable, so I'm not going to cover that one. But the first one that I want to go ahead and cover is the one that you can see before you on your screen right now. That would be this trend line. I've talked about this trend line in several videos, but I want to go over it again for anyone who hasn't seen those videos, and I want to go over it again because I have some more points to add, and also because it is a very very important level of support. If you're interested in why this is such an important level of support, I'm not going to go too deep into it, but there's a video on the top right where I go over this level of support and resistance, this moving average, and I think 2 or 3 other moving averages that are very, very, very important for determining when a Bitcoin bull run is starting and when it's ending as well. So getting above this level, as I explained in the video on the top right, is very important for kicking off a bull run, and I will go ahead and show you why in today's video, but I'll get to it briefly. Now, I would like to see Bitcoin get above this. For right now, I think Bitcoin's probably going to consolidate for another couple of days, and it's probably going to come up here and test this, because the thing about this trend line right here, this moving average right here, the 200-day simple moving average, that's what this is it's trending downward. Now, that means that this moving average is trending downward, but the cryptocurrency, the Bitcoin market is gradually trending upward. So even if the Bitcoin market goes sideways for a couple days and then jumps up just a little bit, it's going to get above it, because this moving average is going to continue something like that for the next little while. I think we are going to get above it, even if we retrace down here and consolidate to like $7,750 or $8,000 and then get a bounce. I think we're going to get through this 200-day moving average, and that's a really, really, really good sign, because guys, one of the things that stopped us from breaking 10,000 over here, as you can see right here, was that we got resistance at the 200-day simple moving average. That's a really important moving average. Let me go ahead and show you real quick why that's such an important moving average. I have in other videos, but I'm going to show you again. In 2017, you can see this moving average right here. That would be the one on the bottom. This is the 200-day moving average. I think in that video I linked in the top right, I said that this was a moving average that was like a break glass and use moving average if bull market is in danger, which is something that we actually did have to do down here when we actually got support kind of around this region, pulling back over here in early February. Unfortunately, that didn't really save the bull market, but this was always kind of that backup moving average that if Bitcoin did break its 100-day, which is this moving average right there, then it could always come back here to the 200-day simple and get support there and hopefully continue the bull run. Now, of course, that didn't happen, but that was always one that we had in the backup, because we never actually had to test it. Here in 2017, as you can see, we never went below that moving average. The same thing is true for all of 2016. Bitcoin never, in the entire 2 years and about 2-month bull market that it was in, from October 15th to December 14th, October 15th, 2015 to December 14th, or about December 17th, actually, 2017, it never went below this moving average. And that's a big sign. That's an important thing, because if you never see a market go below a certain moving average that is used by a lot of people, it's probably an important moving average. Now, one thing that's interesting that I pointed out in the video up there is that when Bitcoin first got above this moving average, because of course it had to be below it to get above it, was right back here in October. And the reason that that's so important is because right back here in October of 2015, what I just showed you right there was actually the beginning of the bull market in 2016 and 2017. So what does that mean? That means that when we got above this moving average right here, it kicked off the biggest bull market in the history of Bitcoin if you discount this one over here. So that's a really important moving average. If we get above it, and I think we're going to for why I just talked about, that's going to be a really bullish sign, and I think that's kind of like the last really important moving average that we need to get above. And like I said, if we get above it, I think we're not going to just see a fake out like we did over here and get resistance at 10,000. I think we're going up, and I think we're going way up off screen, like up here somewhere, especially if the ETF gets approved in September. Now, that's the first moving average that I wanted to show you. Another thing that I want to talk about is the Fibonacci levels, actually, because Fibonacci is an interesting Fibonacci is an interesting way to find levels of support and resistance in markets. If you guys aren't familiar with how Fibonacci works, essentially it's a retracement tool. So you drag it from the top of the market down here to the bottom of the market. And then when the market is actually correcting and bouncing off of its bottom down here, so the bear market that we were in, the little consolidation downtrend, whatever you want to call it, from May on into June happened, we retraced from about $10,000 down here to about $5,800, and then you drag out Fibonacci and go up here, and then these levels over here are your levels of resistance. Now let me turn off some moving averages so we can see that a little bit better. So what we're seeing right now is that Bitcoin is actually getting resistance on the 61.8 level on the Fibonacci sequence, on the Fibonacci indicator, the Fibonacci levels are based off of the Fibonacci sequence, and you divide numbers in the sequence. I'm not going to go into how these levels are determined, but they do actually have a mathematical basis. But we are currently getting resistance on the 61.8% level. If we can get above that and close up there, that's going to help us to get through that 200-day simple moving average that we've been looking at right here, because as you can see, that level, the 200-day simple moving average, sorry about that, my phone's going off. The 200-day simple moving average is right above the actual 61.8% retracement level on the Fibonacci indicator. So to get above that would be very good because that would give us a little bit of bullish action, which would help us to get above the 200-day simple moving average. So guys, you see how these moving averages kind of tie into each other, and when one goes, it kind of causes the other ones to go. It's like a chain reaction of bullish action. A chain reaction of bullish action. That's an interesting one. I'm going to have to remember that. But whenever Bitcoin breaks a level of resistance, that gives the bulls more exuberance, and then that actually helps them to push the price even higher, and you get this domino effect where you get the chain reaction of bullish action, which is kind of I accidentally said that. That's kind of funny. But that's what you see happen when Bitcoin breaks some levels of resistance, like it did over here when it broke the neckline of the head and shoulders pattern right here. It got a bunch of bullish action, came over here, broke a couple levels of resistance, and jumped up here. And now what I think we're going to see is we're probably in the next couple of days, maybe in the next week or so, going to break that Fibonacci level and come up here and break the 200-day simple moving average. And if we do that, I just messed up my chart. If we do that, I think we're going to see a bull run, guys, because I think we're going to see a bull run, guys, because the market has been waiting for it for so long. I think the market sentiment has turned around, and also, of course, we have this looming news of the Bitcoin ETF on the horizon. Now, one thing I want to point out is that when the ETF does get approved, I think it's going to get approved, I should say, if the ETF gets approved, there's probably going to be a lot of sell side action because a lot of people are buying in now. They're kind of doing the buy the rumor, sell the news thing. The Bitcoin ETF, we're like up here, and then it gets approved, we go down, and then we keep going up. But just be careful for that. When the news actually does come out, maybe watch for a little bit of a market retracement. But anyway, with that in mind, let's go ahead and cover the third level of resistance I wanted to show you. And to find it, we're actually going to come out here on the weekly chart, and we're going to find the 50 weekly simple moving average, that being this red moving average right here. This is also an important moving average. It does have some historical precedence, not as much, but as we can see, just in the same way that the 20 weekly exponential moving average and the 20 daily, the 200 daily simple moving average did, it crossed, or Bitcoin crossed it back here in September and October, October of 2015, which was when the bull market actually started. So this is another one of those moving averages that is actually a signal that Bitcoin is about to go on a bull run when you get above it. And as we can see back here, it got above it at the same time. All of our other indicators were telling us that we were getting above, or that we were about to go on a bull run and actually start a long-term bull run. And right now, we're immediately below this moving average. We're right below it. If we look over here, we can see, we zoom in here a little bit, we're right below it. This moving average is currently residing somewhere up here around $8,360, around $8,400. If we can get above that, and as you can see, the wicks right here already has a little bit. If we can get above that, that's going to be another really good sign. So guys, within just a couple $100s north of where we are right now, if we go just a couple $100s north of where we are right now, if you see Bitcoin close like up here around $9,000 on the daily chart, especially on the weekly chart, if you see something like that happen, I think we're going to the, I shouldn't say I think we're going to the moon, but I'm going to say it anyway. I think we're going to the moon if that happens, guys, because Bitcoin has been in a bear market for a very long time. We've already weeded out a lot of the weak hands. A lot of the people that were going to exit the market, I think, already have, to be totally honest. I think a lot of the people that are still here are either having a wild ride shorting the market, or they are able to actually hold and able to actually manage to make money in a bear market. And I think a lot of people in the market are ready for the bull market. And I think the bulls are starting to regain their strength after being just stomped on by the bears for the last 2 months. Tell me in the comment section down below what you think of that analysis. What do you think? Are the bulls done right now? Should we be shorting right now? I don't think the market agrees with you, because shorts are actually jumping off a cliff right here. For the last month or so, shorts have been crashing. This is the short chart if you're not aware of it, from Bitfinex. As we can see in the last couple of days, shorts have just been crashing. I think the market in general is starting to believe that the bull market is going to start. Now, you could say that's a contrarian signal and that the actual market is about to crash because of that. But I digress, whatever. I think Bitcoin is about to do very, very well, especially if it can break these 3 levels of resistance. And another interesting thing is that these levels of resistance, they are all kind of converging. This is called convergence of support and resistance. That's what I call it anyway. When you see convergence of support and resistance, it typically makes them a little bit stronger. But in my experience, when you see, like, if you had 3 levels of resistance and you were to rank how strong they were, say this is 100, 200, and a 300, just call that like the strength index of the support and resistance, how strong they are. They're a 100 strength, a 200 strength, and a 300 strength. If they're all on the same level, you don't have a 600 strength level of support and resistance, because it's easier for the bulls to get through 1 level of resistance than it is for them to get through 3 separate ones. So when these levels are all converging like they have today, or like they have in the last couple of days, and like they did back here around $7,700, it's kind of easier for the bulls to get through it than it would have been if they were all spaced out and spread out, because if they break one of them, it gives them exuberance to break the other one, and then that one helps them break the third one, and then you're just going to the moon. I think the market's going to do very well. Like I've already said, tell me in the comment section down below what you think. I'm interested to hear your opinions. Is Bitcoin about to kick off a massive bull run? Are we going to see all-time high by the end of the year? Is the ETF going to be approved? Let's start a discussion in the comment section down below. If you guys haven't already, go ahead and join the Discord server. There's a link to do so in the pinned comment, and hopefully I'll remember. I'll put it in the description as well. We have like 850 members over there right now. That is blowing my mind. We have a really good community. Shout out to everybody in the Discord server. Tell people in the comments how awesome the Discord server is if you're watching this video and you're in the Discord. But anyway, that's going to do it for this video, guys. I want to thank each and every single one of you for watching, and I will see you guys in the next video. Peace.